Hey, good afternoon, traders. Today is Friday, September 15th, approximately 3 p.m. Eastern Standard Time. It's been a couple weeks since I brought you a weekly update. So today what we'll do is we'll go through the charts here. We'll wrap up what kind of occurred this week and what we can expect for the next. All right, without further ado, we'll start with the dollar. You'll remember a post I made earlier this week regarding a level that if it is exceeded, this whole head and shoulders pattern can be considered invalidated. Now, you'll remember last October, I anticipated that we could be forming a head and shoulders pattern. I drew the left shoulder, I drew what appeared to be a head. We came down, and sure enough, we did form a right shoulder. So the height of the right shoulder here was at a level of 105.625. All right, we are quickly approaching that level right now as we speak. All right, so I said if we exceed this level, 105.6, then this head and shoulders pattern, which I've been talking about for the last year, can be considered invalidated. Now, one thing I was not sure about previously was we did break this neckline on the daily. All right, so that kind of threw some doubts as to whether or not this was a valid head and shoulders pattern. However, if you look here on the weekly, you can see that we really never confirmed this break. All right, so the weekly candle went down, broke below this neckline here that I have drawn from 1984, this trend line, and then the next candle, the very next candle, moved up and above. So because on the weekly it was not confirmed, I kept this head and shoulders intact and have been watching it since. All right, so again here on the daily, this level of 105.625 is very important. Should we exceed the level here on the dollar, should we absorb that price, then we can consider this head and shoulders pattern invalidated. Okay, so if that dollar moves up along with the VIX, we can expect some drawback in the U.S. stock market, correct? And that is the case. So let's just jump over to the VIX to see what our VIX is doing right now. And today, I want to let you guys know, we did set a 2-year low. We started here, this candle, this green candle, at a 2-year low, just below our level of 12.84. It has been rising today, but again, the VIX right now is at all-time lows. Okay, so as I said in my previous post, when the dollar is up and the VIX is down, it kind of has a neutralizing impact. So it's just par for the course. It's just business as usual in the market, and that's what we should see. And the market has been doing business as usual. All right, so the index that we have mainly been tracking here is the SPY, and you can see that we are in this orange channel, which a couple weeks ago I said I expected us to stay in. Now I do have a new trend line drawn here. See this red line? That is acting as resistance currently, but we also do have some support down here. So next week what we're looking at is, will we break out and up? Will the market continue up? Will it break this resistance here, this red line, and continue up? Or will it break this support and move down? All right, of course, all of this is pending what the US dollar does. If the dollar breaks this 105.6 level to the upside, you can expect the SPY to break its support and move down. All right, if the dollar fails to break the 105.6 level of resistance, that means two things. First of all, this head and shoulders pattern is still intact, and we can still expect weakness in the US dollar going forward, at least through excuse me, the end of the year, potentially breaking that neckline and continuing down in decline, and that then would cause the SPY to break this upper level of resistance and continue moving up in the direction that I have predicted so many moons ago as we continue this blow off top, and as I expect us to do, to break all-time highs here on the SPY 500. Okay, so you can see here on our chart that the previous high on the SPY was 480, and that was the top of Elliott wave number 3. We came down, that was wave number 4. Wave number 5, if I can zoom out here, is generally longer and more extended, kind of like wave 1, and I expect that to take us to 500 to 600 on the SPY before the market catches up to fundamentals. Of course, all the fundamentals right now in the market are telling us that we are going into a recession soon. And I think we should pay attention to those fundamentals. But for the time, we're going to watch these technical indicators, and they're going to show us, hopefully, when we reach the blow-off top, the insane, the irrational, the market price action that just doesn't make any sense, that blow off top, we should be able to reach that, I would say, by early next year before we continue down, and at that point, look out below. Okay, now on over to our Bitcoin chart, and earlier this week I posted, listen, we have to absorb this price of 26,500 and confirm that price is our support, which we have not done yet. All right, it's Friday afternoon. I doubt this will happen this weekend, but again, we have to absorb 26,500. That level is very important. If we don't absorb that, we are still in a bearish pattern, and this is simply just a bear flag here. This bounce off of our 25,200 to 300 neckline. Again, this is a neckline from an inverse head and shoulders pattern, and this right here, guys, this neckline is so important. Remember, months and months ago I predicted we'd go down and retest it. What I did not know is we'd come back down and retest it a second time, but that has happened. All right, so far that support, that neckline, has held strong, but if that breaks, look out below. All right, this is the CME futures chart, and like I said on the Bitcoin spot chart, if we break that neckline, I would expect us to come down and fill this gap at 20,290. I don't expect us to go lower than that. Like many analysts are calling for anywhere from 10, 12, 14,000. I see a lot of bears in that ballpark. All right, I don't expect us to go down there. I think we hit our lows. For Bitcoin, the lowest we would go is 20,290, and that is only if we break that neckline. All right, guys, so let me show you the chart one more time just so you're good and clear. The neckline is at 25,000. I have it marked at 25,337, but it could be anywhere from 25,200 to 25,300. Look at that level. We may come back down next week and retest that neckline one more time. Again, if it holds, it's positive. It's we're still in a bull market then on Bitcoin. If it breaks, going back down to 20,000. All right, guys, so this is kind of what I have been waiting on and why I have not made a lot of trades. Actually, right now, I'm only in comp, and I'm doing well in comp. I probably should be taking profits, but I'm not. It's the only one I'm in. I've got my stop outs set, and I may move them up depending on price action here. But again, if Bitcoin can absorb that 26,500 area and confirm, again, bullish, we'll probably go to 30,000, 31,600 and retest that level again, maybe break it this time. If it does not absorb that 26,500 with confirmation, you can expect us to come back down and test that 25,200 to 300 neckline again next week, and hopefully that holds us. Fingers crossed. We'll see what happens. All right, hopefully the video helped, guys, and if it did, you all know what to do. I can't advertise my social media sites here because this video is also going to TradingView, so I won't do that. I'm just gonna say goodbye until next week. Peace, y'all.